what we have by any measure is the greatest wealth gap since the 30s. In the United States, the top 1/10 of 1% of the population has a net worth that's approximately equal to the bottom 90%. And so we have a large wealth gap. China's got a large wealth gap. And then with that, we have the political and the greater polarity. And so not the greatest polarity since the 1930s. So, and we have a situation where we don't have much of an ability to ease monetary policy. And then also, like the 1930s, that's why I think it's a point of comparison, is we have a rising power challenging an existing world power in the form of China-US challenges. And as Min and we talk about these things regularly. Like we said, there are 4 kinds of war. Min said, and we agree, there's a trade war, there's a technology war, there's a currency capital war, and there is a geopolitical war. In other words, so that's a phenomenon that's happening at the same time. So internally, we have a lot more conflict. So now if you play that out, you say this cycle is this is the best that we get, this moment. We are at the best. The cycle is not going to continue forever, the expansion. You have this sag. Then you have elections and you have politics, which becomes greater extremity. And so on monetary policy, it's not going to be so effective. Imagine if you had a downturn and you have not as effective monetary policy. Then there has to be coordination. So how do you get coordination in this kind of political environment? You have to have a coordination between fiscal and monetary policy to be able to do something. And then you have to have coordination between the various factors to make decisions on what policy should be. So I think that that's the landscape, broadly speaking, in the world, and we are in that kind of self-reinforcing sag because as one country, as China slows and the United States slows, and they all have their headwinds, that makes it not as good for the others who deal with those countries. So that's what the environment looks like to me.
We can make choices as to how much pain we want to take and when we want to take it, which we did after the financial crisis of 08, 09. The risk is that there are imbalances that build up that mean we lose the chance to make those choices, and we end up, you've given us a lot of tinder for a fire here. May I ask you, since you know financial markets so well, the IMF has warned about corporate leverage and the $17 trillion of corporate bonds that could be at risk if there's a recession. It's also expressed concerns about this reach for yield that is going on at these very low interest rates. Do you see either of these things as key risks when it comes to generating the kind of market event, the kind of credit event that we saw in 07, 08?
Let me describe the corporate, okay? What's happened is corporate balance sheets, for a variety of reasons, have borrowed a lot of money. As interest rates went down, a lot of money's available, and the return on equity was higher than the cost of funds. There has been a lot of buying, leveraging up. And there's been a market developing, like in the form of the leveraged loan market, in which essentially you can borrow money with hardly any interest rate and almost the promise that you will never have to pay back principal because you'll keep rolling it over and over and over. Mm-hmm. And they're doing that because of a spread. So the notion is, like, you can borrow the money, and if you don't have to roll over the principal, you don't have any interest, you don't have much in the way of debt service payments. So now you look at that and you say, that's pretty wild, that's pretty crazy. And there are elements of that existing. And of course, but there's the central bank on that who will sort of take care of all that, and because they'll provide the money and then we have the negative interest rate environment. And so those extremities that we're reaching are not such that you're as likely to have a debt crisis in terms of, I look at the debt service payments, but you have a lot of, you've reached the limits almost of that being able to happen. And then you have those obligations. So that creates this big sag more than it's likely to create a big bust.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.